Welcome to Multitude Group's Capital Markets Day 2023. It's our third CMD in our 18-year journey, and we are excited to share our latest developments with you. I'm Lasse Mäkelä. I'm acting as your host today. I lead the investor relations at Multitude, as well as mergers and acquisitions and strategic initiatives within the group. I have a long background from investment banking, finance, and fintech entrepreneurship before joining Multitude 2 years ago. Today's presentation includes forward-looking statements concerning future events and our financial performance. These are predictions based on our current expectations and assumptions, many of which are outside our control. Please note today's content should not be taken as an investment advice. Okay, let's move to today's agenda. We will dive into the key areas of our company, namely our strategic evolution, financials, our 3 business units, and technology, risk, HR, and ESG updates. The day will be fully packed with a lot of information, and we intend to have a 5 minutes break at around 11:15 CET, and we intend to finally end the session at around 12:40. Good, let's move forward. I will now give you a short summary on where we currently are before we go to the main part of the Capital Markets Day. So we are a profitable, dividend-paying and listed fintech company. And we have been creating success stories in fintech for the last 2 decades. Multitude was started in Finland in 2005, and we have an EU-wide banking license in the group. Our revenues amounted to 212 million euros last year, and we have about 700 employees. And we are providing services in 16 countries for some 400,000 customers in total. We are listed on Frankfurt Stock Exchange. We have been growing strongly and we have been profitable during the last 18 years. But COVID pandemic was difficult for us, as demand for the loans was reduced, as the companies did not invest and people stayed at home and paid down their loans. We used this opportunity presented by COVID also to streamline some of our businesses in non-profitable countries, which were mainly outside of Europe. And therefore, we saw a reduction in our sales during year 2020. But we are happy to show you that we are back on growth track, and especially our profitability has been growing rapidly during the past few years. Our mission of democratizing financial services has always been our guiding principle. So democratizing financial services through digitalization, speed, and user-friendliness in a sustainable way. Our values were actually developed together with our employees, and these 5 values give you a good idea on how our customers and employees appreciate about Multitude. Our focus is on customer centricity. We integrate solutions by seeing things through our customers' eyes. Our entrepreneurial spirit drives us forward. We value curiosity, innovation, agility, and efficiency, and always try to operate with minimum bureaucracy. We treat all shareholders with respect, including our customers, colleagues, partners, and investors. We take accountability for our actions and strive to conduct business sustainably. And finally, we achieve the highest outcomes by working together in a winning teams. Multitude consists of 3 business units currently, which are supported by our growth platform. The first business unit is Sweetbank, which is our shopping and financing app. It also includes prime loans for consumers, as well as our recent business unit, warehouse lending. Sweetbank represents about 9% of Multitude's total sales, and it is focusing on achieving profitability. Ferrratum is our consumer lending business, which represents about 81% of total sales. Ferrratum focuses on continued strong profitability and stable growth. Our third business unit, CapitalBox, which focuses on serving European SMEs. CapitalBox represents about 10% of the total sales, and its main focus is on accelerating growth and profitability. If we then look at our growth platform, this is what we see. Our growth platform is the key element for enabling our growth and scalability. It acts as an internal banking-as-a-service platform for our operations. Let's look at the growth platform at the bottom first. It includes elements such as compliance framework, banking license, technology stack, big data, and AI, our product library, and our customer management systems and processes. So all these elements build our growth platform, which enables our centralized and standardized operations and enables scalability. Our growth platform generates benefits, which are described at the mid-layer of this slide. Firstly, it brings faster execution for the business units. It also allows them to grow faster and focus on the actual business. Secondly, it brings attractive funding for the business units through its access to deposit funding. Thirdly, it sources global talent to our business units, as we have more than 40 nationalities inside the group in more than 25 locations. Next, the growth platform enables cross-selling opportunities between the business units. And finally, the combination of all these benefits brings scalability for the business units who are using Multitude Growth Platform. Good. So finally, our investors have been asking a lot of questions about us, and we want to summarize these key questions here, and we will answer these questions during today's session. First question is, what are the key growth drivers of Multitude during the next few years? Second question is, what does the future development of Swedbank look like? Third question is, how is the recent uncertainty in the market influencing Multitude's business? And finally, what are the key guidance matrix for Multitude going forward? But that's it from my side, and I'm now happy to introduce you to our founder and CEO, Jorma Jokela, who will now take you to our strategic evolution. Thank you once more from my side, and Jorma, please go ahead.
Thanks, Lasse, and hello everyone. My name is Jorma Jokela, CEO and the founder of Multitude. Today, we will guide you through the Multitude strategy, the key functions and business unit. Our aim is to provide you with the insight on how we plan to navigate this current market environment to moving forward. And I hope our presentation gives you a similar view to mine on the market potential, our great team, their skills, and our unique market position. I think we have something unique over here. Like Lasse said, time flies. It's been over 2 years since our last Capital Market Day in May 2021. And at that event, we introduced a new strategy and rebranding for both group and our business units. Our biggest success is how well we have done against our financial guidance, what we public on this time. We have seen over 50% EBIT growth yearly. For me, meeting our guidance felt natural because I know the people and I have had the privilege to lead in this amazing team for over 18 years. I have seen how well our team does when they have a clear goals and motivation on the place. Today, I'm extremely excited to present our evolved strategy and plans for the future. But let's start our roots first, where we have come. Ferrratum journey began 18 years ago in Helsinki, Finland. We were a small visionary team questioning why the financial industry hadn't adapted to meet a need of modern customers at a time when other sectors were rapidly digitalizing their offering. Seeing a real demand, we took the initiative to address it ourselves. We set out to create solutions that were pure digital, easy, simple, and fast, catering to customers often overlooked by traditional banks. Our services are designed to be accessible to everyone, everywhere, at any time. Our foundation has always been those core principles, and our commitment to them remain as strong as ever. As we stand at the forefront of fintech and digitalization, we are witnessing the 6 powerful mega trends that are driving our industry in the future. We are deeply committed to sustainable finance, which is steering the financial industry toward greater democratization, eco-friendliness, and responsibility. By integrating ESG criteria into our lending investment decisions, we are ensuring that our growth is not just profitable, but also sustainable and responsibility. The digital management of personal affairs is now commonplace, boosting customer acceptance of digital financial solutions. This trend is expanding our customer base and enlarging market potential. The user experience is key. We prioritize the customer's journey over the product itself. This is the evidence across the sectors, and it's a driving force in our product development strategy. We believe that user-friendly digital financial solution should be accessible to all, irrespective of their geographical location, nationality, or socioeconomic status. And open banking is just more than just PSD2, API, and data sharing. It's about understanding that individuals own their own data and should have a full control over it. This will lead to multiple of new interconnected financial product, service, and partnership. Those megatrends are doing more than just influencing our future. They are making it more dynamic and full of the opportunities. At the Multitude, we are to build a high-performance multicultural organization that has over 18 years of experience and competence from more than 25 countries worldwide. Our tactical decisions are grounded in our core beliefs, which is behind our exceptional track record of execution. We are the champion of agile methodology, which we believe is the only way to build amazing customer experience. Our global thinking and local action approach is the fastest way to achieve the goals in complicated digital and data-focused environment. We have shifted from the old idea of the big, huge central office hubs for managed talent remotely. We are committed to sourcing the best global talents, no matter where it's located. Monological, outdated IT system architects, they just don't fit our vision. They are too slow, costly to develop. And we favor an architect of numerous small, interconnected software components that provide fast, cost-efficient, and stable way to scale our business, which is called microservice. Naturally, this is supported by cloud-based hosting, which can be scaled in seconds to meet any demand for computing power. This is the foundational assumption for our big data lakes, as well as supporting automated, real-time, and AI-driven process. This topic you will hear more from our CTO, Mr. Kabele, later on today. Good. Our current strategy has pushed us forward with impressive annual EBIT growth over 50% yearly. And we are making 4 strategy adjustments for further enhance. We don't need strategy revolution, and that is the reason why we are choosing strategy evolution over revolution. Firstly, we are refining Multitude vision to be even more aligned with our goals, where growth platform is middle of our strategy and actions. Secondly, our sweep team and technology stack will be fully integrated into our customers and SME business tribe, ensuring the wider and more seamless service to our customers. The third adjustment is the launching of the new wholesale banking tribe, making a significant expansion of our service and tapping in the new market segment, combining warehouse lending and payment service offering for institutional customers. And lastly, we are shifting our financial guidance from EBIT to net profit, underscoring our commitment to serve our shareholders better. With those strategy adjustments, we are set to ride profitable growth further. At the Multitude, we are confident in the vision that has guided us to the common direction, and today we are excited to share how this vision will transform moving forward. Building the most valuable financial ecosystem has been our North Star, leading us to create a comprehensive set of financial products and services that works in harmony and serve our customers' diverse needs. As we look to the future, we are sharpening our focus with the new vision, building the most valuable financial platform for overlooked customers. This reflects our commitment to inclusivity and our dedication to providing financial solutions to those who have been consistently underserved by traditional banks. Additionally, we like to promote our growth platform in the middle of our vision. The inspiration for our people at Multitude is fueled from our mission to transform the financial world, offering incredible experience to customers who are often overlooked by other banks. We are fully dedicated our mission to democratization financial service through the digitalization, making them fast, easy, and green. This ethos is also where our product logic is based on. We aim to build something unique and extraordinary, something that everyone involved can be truly proud of. Our vision, build the most valuable financial platform for overlooked customers, set a unified goal and direction for our team. Our values are what we believe in and what we value in the greatly and where we base our decision making. They are principles that we live by every day at Multitude. And you will hear more on this from our Chief of Human Resource, Mr. Vella, later on today as well. Good. As we progress at the Multitude, we are integrating the Swedbank into our established tribes, while also introduce the new wholesale banking tribe to promote our future growth. This strategic alignment with consumer banking tribe and SME banking tribe is not merely an organizational change, it is expansion of opportunities and possibilities. Swedbank will continue under its name in the mobile banking and shopping sector, ensuring that customers retain the familiarity of the brand while gaining the new product offering from the Ferrratum and CapitalBox teams. This integration is designed to unlock cross-selling opportunities and enhance our operational scalability. Creating this wholesale banking tribe was a natural move, driven by significant growth in warehouse lending and payment service. It let us use our growth platform skills and resource, not just for ourselves, but also for others in the finance sector. Our FinTech growth platform is backbone of this strategy. After this restructure, we will have 3 business tribes operating independently on the growth platform. Multitude Bank, concentrating on the wholesale banking, Ferrratum, digital consumer banking, and CapitalBox focus on SME digital banking. And Swedbank brand and its customers are now part of consumer and SME tribes, will benefit from the wide range of new lending service. And in line with our platform strategy on scalability and exploring the new ventures, we have an investment in Sorter beginning of this year, a leading financial service comparison platform, signaling our readiness to embrace new possibilities. At the Multitude, our growth platform expansion is thoughtfully architected upon the 3 fundamental pillars: organic development, partnership, and acquisitions. Each pillar is crucial for our growth on both platform and tribe levels. And I will leave tribe CEOs to explore more specific later on today. Organically, we are improving our customer experience and internal process, expanding our reach with the new product and markets, and enhancing our unique financial service. Our partners helping us quickly expansion our product range and reach a new customer groups efficiently. Acquisitions are the key strategy choice, allowing us to enter a new market and new product. They are important for fueling new energy into our growth platform and integrate seamlessly with our existing tribes. We have carefully analyzed each tribe market potential using data from local and global source. We did not want to apply the one general model to all tribes, so we investigated industry-specific data and built a unique model for each tribes. And what was surprised both me and our team is the massive opportunity presence in each of our 3 tribes, which is growing larger every day. The addressable market size totals over 55 billion euros in lending portfolio, which traditional banks have overlooked due to lack of understanding their customers. And here you can see this picture, you can see the share from this huge market potential at the tribe level. And we are eager to take this challenge and will do everything necessary in the coming years to increase it. Hope you have already recognized that we are quite exceptional fintech company with values based on ESG, deliver continuous growth and profit, fueled by yearly dividends payment to shareholders. Our environmental targets will be launching today, and we aim to make a positive impact on our society and environment. And you will hear more about this from our ESG manager, Mrs. Khumalo, later on today as well. We provide current EBIT guidance in May 2021, which we are well on track today. We would like to shift our guidance from EBIT to net profit to better serve investor needs. Additionally, we are extending our guidance period to end of 2026, with the goal of achieving 30 million euros net profit, what is, by the way, over 25% growth yearly. Our CFO, Mr. Ecker, will elaborate on this more after my presentation. Additionally, we want to share our target for dividend payout ratio, which is set between 25 and 50%. Naturally, this will be subject to approval in our yearly shareholder meetings. But before I end my presentation, I would like to leave you with our management dream to build a €1 billion valued company in the next 5 years. I really want to thank you for joining our Capital Markets Day, and it's quite the fun to do impossible things together. And next, I want to introduce my colleague and our amazing CFO, Mr. Ecker, to whom I like to hand over. Please, Bernd, go ahead.
Thank you very much, Jorma. Good morning, everybody. First of all, Jorma, before I start, thank you very much for the label as amazing CFO.
I hope you like it.
It is always good to see that we are aligned when it comes to fundamental questions. So that's thank you very much for that.
That's a good.
My name is Bernd Ecker. I'm the CFO at Multitude, and I will talk about how we look at the investment case Multitude. I'm going to present data reflecting most recent financial performance. I would like to provide insight into how the organization has become leaner and more efficient over the last couple of years. We will naturally talk about asset quality. Funding strategy will be a topic. We will assess our performance relative to the financial guidance given in the previous Capital Markets Day some 2.5 years ago in a little bit more detail. And of course, we want to share our future financial performance guidance with you. Let us get started and let us talk about Multitude as an investment case. If we take a step back to identify what features or what corporate and financial patterns support our view that Multitude has the potential of being a rewarding investment case, then these are the key value drivers that we are seeing. Number one, we are a growing fintech company. Many companies have been struggling currently. We don't. Number two, we are highly resilient. What do I mean by that? The market has, over the last couple of years, confronted us with a variety of challenges. Nonetheless, all businesses are showing growth and all business units are on an upward profitability trend. Number 3, we are a market leader. We see a trend towards market consolidation and we want to benefit from it. Number 4, we are increasingly profitable and the journey is supposed to continue. Number 5, as Jorma has pointed out, we are dividend paying. We have a strong dividend track record and we want to continue distributing part of net profit to shareholders. Naturally, this is subject to General Assembly approval case by case, but it is a clear statement to underline the ambition to increase shareholder value. These are the main reasons why we think the investment case Multitude has a lot of value creation potential. My next topic is growth dynamics. From 2017 to 23, our business has seen an impressive CAGR, which stands for compound annual growth rate, of slightly above 15% in loans and investments. So 15% each year growth compared to the previous year. I'm using here a quite long reference period to demonstrate the business's resilience in overcoming crises. You see a dip in the portfolio size in 2020 on this slide. However, from 21 onwards, we have been moving on an upward trending trajectory, demonstrating exactly this resilience I referred to. Our strategic main focus currently is on European customers, representing some 90–70% of our business. Equally important as growth is our dedication to profitability in all markets. It is not about maximizing the number of flags on any virtual map. Our focus is on growth and profitability, which is always a bit of a trade-off, but currently I think we are balancing really well. Let me focus on profitability next. Historically, profitability metrics used to be very strong, peaking at 45 million EBIT and more than 20 million net profit in 2019. We then experienced a profit reduction in 2020, which is obviously impacted by COVID, but managed quickly to re-establish positive profitability momentum and to show a sustainable path of profit increase. We have just last week published, and some of you might have participated in our earnings call on Thursday, published a 9-month numbers with 32.5 million EBIT, 15.2 million profit before tax, and 12.4 million net profit for the first 9 months of this year. Multitude is about to complete its 3rd consecutive year of significant increases in EBIT, in profit before tax, and in net profit. From 2020 to last 12-month numbers as per end of Q3, we achieved an outstanding profit CAGR of 23%. Key drivers behind this, in my personal view, quite compelling performance, have been firstly regained growth momentum. This growth momentum has been instrumental in establishing improving profitability in all businesses, which is reflected in the graph on the right-hand side. We have pushed up EBIT by 50% during the first 9 months this year. All businesses are producing significantly better results than last year. Ferrratum EBIT up 3 million, Sweep up 4 million, and CapitalBox EBIT up by 4 million as well. My colleagues Kristjan, Kajakas, Mantvydas, Štareika, and Antti Kumpulainen will provide you with more business insights in a couple of minutes. So I recommend to wait a bit. Secondly, when it comes to profit drivers, ever improving data-driven underwriting and credit risk management skills. The 3rd profit driver is scalability of our operating model. On the scalability of the operating model, I would propose to spend an extra minute. Multitude's operating model is designed to be flexible and responsive, to meet the demands of clients in a rapidly changing environment. At the same time, most of Multitude's core processes are highly standardized and automated. The most relevant driving forces have been automation in underwriting and other core processes, a leaner organization. To give an example, we are in the process of reducing the number of legal entities in our group by 35%, so more than a third. And finally, elimination of non-profitable businesses and markets. This progress in efficiency and scalability is mirrored in a 23% reduction in personnel expenses between 2018 and 23, an annual incremental savings rate of 5% each year, and a 16% reduction in operating expenses during the same period, which is equivalent to an annual cost reduction of 4% each year. Let us move on from our very successful cost management to quality of assets. In the context of analyzing asset quality, on slide number 27, I will narrow my focus on key performance metrics and on financial impact of credit risk. Clemens Krause will provide more detailed insights later in our Capital Markets Day presentation. My key messages on this slide, number 27 are 28, sorry, 27 is fine, sorry. In absolute numbers, last 12-month credit loss level is in the region of 80 million. This is a credit loss level which is 22% below the corresponding number of 2019. This is a very significant reduction. Credit losses as a percentage of portfolio size have been reduced by even almost 50%. Currently, annual credit losses over net accounts receivable, and this is a metric I'm sharing quarterly, as you might be familiar with these numbers from our earnings calls, on a 15% level, down from almost 30% within 4 years. So essentially, this means that we are cutting relative credit losses in half. This strong performance, in turn, is a consequence of strategic choices. So this focus on profitable businesses and markets, which I've tried to highlight already. Secondly, technology and know-how. We have an industry-leading underwriting and credit risk management team. And thirdly, organizational principles. Multitude is in control over the value chain, from data science to underwriting models to loan decisions and collections. I have two more topics I would like to spend some time on. That is funding and financial targets. Let us take funding first. I would like to briefly talk about Multitude's funding strategy, our funding principles, and about financial impact of those. Here is how I would characterize Multitude's funding principles. Number one, cost efficiency. This is the most relevant factor driving our funding mix, but also our group and legal entity structure. The core strategy here is to optimize deposit funding of and for all businesses. Number two, diversification. We will also going forward maintain a diversified funding strategy, including activities on the capital markets. Within deposits, the plan is to minimize concentration risks in our client base. Currently, more than 99% of deposits are at or below euro 100,000. So there is hardly any incentive to withdraw funds. This is one of the reasons why our deposits are so sticky. Number three, strategic focus. Stable funding structures require long-term planning. It is now, in this high interest rate environment, paying off that we had decided to streamline our group structure to push deposit utilization already a couple of years ago. And finally, number four, profit orientation. Profit is our main source of equity. Currently, we hold 184.4 million IFRS equity, a net equity ratio of more than 28%, which is really, really strong. Let us now take a look at funding-related financials. Naturally, current interest rate levels and limited receptiveness of financial markets are a burden in connection with both cost and also availability of debt. However, over several years, we have acted in accordance with the funding principles I've just presented. Consequently, we managed to reduce dependency upon debt capital markets and to elevate utilization of deposits. The implementation of this strategy is reflected on the chart on the left-hand side. In numerical terms, the key message is simple. 4 years ago, the ratio between capital market debt, excluding IFRS equity instruments, to deposits used to be 1-to-1. So roundabout in absolute numbers, 200 million each. Now, the same capital market debt to deposit ratio is equal to 1-to-11. So much more favorable and cost efficient. So from 200 million each to 50 million debt capital market debt to 550 million deposits. The financial impact thereof is shown graphically on the right-hand side. Relative debt funding costs are much, much lower than historically, despite the increasing interest cost pressure, which, to be honest, and I need to be open about that as well, which we will have to cope with also going forward. In fact, for us, funding is no longer a pure cost factor. We are intending to transform efficient and scalable funding into a competitive advantage. Antti Kumpulainen will talk more about this topic from a business angle. Finally, and I guess this is of interest to all of you, let us talk about targets and about performance. Before we look ahead to the future, let us take a look back at the financial guidance we had published in early June 2021. So before we all entered into a period of political instability and before we all experienced a sharp rise in inflation with all its consequences. An assessment of our 21 guidance yields the following results. Guidance metric number 1. We would return to top-line growth in the second half of 21. This is a clear tick. Revenue increase on a quarterly basis was achieved as indicated in our guidance, and we have been growing sustainably since then. Secondly, in addition to sustainable revenue growth, we had committed ourselves to significantly ascending profitability levels. The logic was simple. Achieve 20 million EBIT in 2021 and increase by 50% each year for 3 years in a row. So how did we perform? In 2021, EBIT guidance of 20 million, actual EBIT performance of 27 million exceeded guidance level considerably. 2022, EBIT guidance of 30 million, again, this is a tick. Actual EBIT performance 31.6, outperformed target level of 30 million. For 23, another 50% is increased to an EBIT target of 45 million. The first 9 months resulted in 32.5 million EBIT, which I've already briefly mentioned in this presentation. We therefore confirm that we are on track and expect 23 EBIT to land in the range somewhere between 44 and 46 million euro. When we issued our midterm guidance in 2021, and I do remember this very well, not everybody had considered our ambition to achieve 20 and then 30 and then 45 million EBIT realistically doable. For us, it was not so much about the exact numbers, but about demonstrating the ability to get back to growth and to achieve very meaningful increasing profit targets. Finally, let us talk about the future and how our view of the future presents itself in financial terms. Over the last couple of years, several investors and other stakeholders have asked us about our view, not only on earnings before interest and tax, but also about our net profit expectations, which I understand. We do acknowledge that, and we do acknowledge also that this has become even more important as portfolio sizes and consequently funding needs are growing, and as high interest rate levels somehow discount the economic relevance of EBIT-only type of targets. We therefore concluded that the best way of meeting investors' requests in this respect would be to introduce net profit as midterm guidance key performance indicator. And this is exactly what we are doing now. Our midterm net profit guidance captures the period up until 26, so slightly more than 3 years. Our target level is a net profit of 30 million euro in 2026. Please note that this net profit metric is subject to adjustments for one-offs, potential one-offs, and for negative external economic factors. Taking the most recent audited consolidated financials from 2022 with a net profit of 12 million euro as a starting point, this target implies a net profit growth by factor 2.5 or a compound annual growth rate of net profit of 25%, to be precise, 25.7% over 4 years in a row. In order to get us there, we will have to invest in future growth, and we also need to apply stringent capital allocation principles. These include all businesses and all ventures will be measured against net profitability targets. All business initiatives are expected to be incrementally net profit accretive within 2 years. In the context of our financial targets, I also would like to give a more technical update on the way we will present our financials going forward. As from the financial year 23 onwards, we will change the structure of our primary financial statements, so P&L, balance sheet, and cash flow statement, in a way so that they follow financial industry structure. This has already been discussed with our auditors, PricewaterhouseCoopers, and will be implemented at year end. We are convinced that this will go hand in hand very well with the implementation of net profit focus, and we think that this will make it even easier for investors and all readers essentially to understand the key drivers of the business. From this technical aspect, I want to go back to the main content of a capital markets day. This is strategy, business, and performance. With this, it is time to hand over to our tribe CEOs. Kristjan, Kajakas, may I ask you to take over?
Thank you, Bernd. Hello, my name is Kristjan Kajakas, and I am the CEO of Consumer Banking Tribe. I've been with the company now over 13 years, having various positions, from product owner to today's position, where I have been for the last 3 years, and still enjoying every day of this adventure. Today, I'm excited to present you a joint story about Ferrratum and Sweep. First, having short introduction about the tribe, defining our customer base, and outlining our service approach, and presenting our growth strategy for the upcoming years. So let's embark on this journey together. So who is our customer? This is the question I get quite often. Our customer base is equally split between male and female. They're pretty well spread to all age groups, on average about 30 years of age. Salary level is slightly above country average, and they usually are living in cities. What unites them is that they are a diverse group with distinct needs. In certain instances, they encounter unexpected financial needs and appreciate swift service to address these. In other cases, our customers are tech-savvy individuals who prioritize superior servicing over pricing when applying for loans. They're seeking the convenience of accessing financial solutions from any location. Our operational approach is summarized by the principle digital first. This philosophy underscores our emphasis on digital marketing as primary focus. In our customer service, 79% of customer requests are efficiently handled throughout digital channels. And we take pride in providing instant loan decisions. And in the majority of cases, we are committed to delivering funds to our customers with unparalleled speed, often instantaneously. Presently, we operate in 13 countries across Europe, establishing ourselves as a well-recognized brand within our segment. Our market presence is strengthened by mature sales channels, contributing significantly to the sustained growth of our customer base. Integral to our success is our robust technical platform, which features a modular technology for facilitating agility in adapting to evolving needs. We have a hybrid cloud infrastructure, ensuring business continuity, and implementation of APIs that empower swift third-party service integrations and facilitate the seamless incorporation of complementary product offerings to our customers. In our daily lives, unforeseen financial needs can catch anyone off guard. Traditional lenders, unfortunately, frequently struggle to provide the swift responses needed in these situations. Recognizing the challenges faced by the individuals when unexpected financial demands arise, we are committed to addressing this gap.
Let's
When
explore
planning-
taking a Ferrratum credit limit loan from 2 angles: customers' experience and behind-the-scenes operations. AI supports the entire customer journey, beginning with strategically attracting the right customers based on our credit scoring models. Step 1, apply. identity verification, valid ID or passport. Step 2, verify. Loan history and external check by PSD2, internal scoring calculations, KYC processes, external registers, defining personalized offer, AML. Multitude has been at the forefront of AI applications in credit scoring since the very beginning. Our journey began by collecting substantial data samples for the first credit scoring model to be developed and deployed in May 2006. AI-based machine learning algorithms utilizing a large number of data points from various data sources, internally gathered, credit bureaus, PSD2, bank, government agencies, and behavioral, offer is personalized for each customer depending on his risk level and affordability. Step 3, accept. Accept smooth credit decisions 100% digital at the comfort of customers' home. Step 4, money transferred. Money transferred, instant access to your credit wherever you are. Our in-house expertise in advanced feature engineering enables us to create a pool of over 500,000 unique features. It is with this wealth of information we develop predictive models that surpass the capabilities of any other data source available. While none of this is visible to the customer, it silently shapes and enhances their entire experience. Ferrratum.
So I hope you enjoyed the video that was showcasing our solution to address the customer needs. And we take great pride in our team's achievements, delivering both the video and also all the processes that hundreds of thousands of customers across Europe have used or are currently using as service. All right, but let's move next slide and take a look at how we have managed our business since the last Capital Markets Day. On this slide on the right, you can see how we have managed to convert even more customers from contacting customer support to self-service. And this has made our operations very scalable. And what is most important, our customers are loving it, showing by the customer satisfaction score you can see on the slide. Since 2021 Capital Markets Day, we've successfully expanded our lending portfolio by over 50 million euros. This growth has been strategically concentrated in our focus markets. The strategic shift we took when we last met, resulting in an enhanced asset quality and improved profitability. Main growth drivers have been improving digital marketing and upgrading customer experience. And next, let's take a look how we will take our business further. Presenting our future growth drivers, we are expanding from the previous 2 customer touchpoints, which included installment and revolving loans, to a broader spectrum of 5 touchpoints. This evolution encompasses current accounts with cards, savings, and an engagement program, providing a more diversified and comprehensive range of financial services to our customers. We offer 2 distinct credit products, installment and revolving loans, each tailored to meet different customer needs. These products boast a long-standing history within the Ferrratum portfolio. As illustrated on the right, both products are yet to be fully scaled across all markets, and this presents a significant opportunity for us to expedite the growth of our core business in the markets we currently operate. The integration of Ferratum's customer base with Suite technology presents a significant opportunity to expedite our organic growth by leveraging the assets we have already built. In specific markets, Ferrratum customers now have the option to enjoy a debit account completed with a virtual MasterCard. We have introduced an engagement program for our customers, placing them at the forefront of our efforts. This program enables our app users to accrue loyalty points, which can be converted into various benefits. By incorporating elements like payment behavior, collections, and referrals, this initiative aims to enhance customer retention and elevate the overall lifetime value of our customer base. Our new consumer banking tribe strategy revolves around the core foundation of credit products, with sweep offerings serving as complementary elements strategically designed to bolster customer retention. This distinctive strategy sets us apart from the traditional neobanks that predominantly emphasize acquiring a high volume of customers. Instead, our primary focus is on maximizing customer lifetime value. Opening sweep account is super simple. Existing customer can find the link from Ferrratum My Account or from our websites, install the app, and after answering simple KYC questions, will unlock the full benefits of our digital banking service. So how simple can banking be? After incorporating sweep products, we're entering a market segment more than 3 times larger than today, with a lending portfolio of around 24.9 billion euros. This indicates substantial growth potential for our business. Our growth strategy is based on 3 pillars: organic, partners, and M&A. I have previously discussed our organic growth strategy, so I will refrain from revisiting it. Our key emphasis lies in rolling out credit products, expansion sweep technology, leveraging data science and AI to enhance our digital marketing efforts, and integrating new technologies and databases to continuously refine our underwriting processes. Leveraging our pan-European presence, we aim to collaborate with various partners to embed digital funding solutions into their customer journey. We recently conducted a pilot of sales finance in Finland, capitalizing on sweep technological infrastructure, which offers a lightweight and scalable solution for potential expansion into other markets. But currently, our initial focus is on validating the proof of concept before start scaling the operations. In the scope of M&A, our strategy is well defined. We are actively exploring to purchase loan portfolios within our established markets. In the countries we operate, we are exploring new products that could fit our customer needs. On top of that, we are extremely interested in businesses that operate in the same customer segment in the countries we are not present today. We are looking those companies for full M&A or also joint venture structure to utilize our platform to enable their growth. From a group perspective, our reporting focus is transitioning from EBIT to net profit. However, at the business unit level, our target remains centered around achieving robust EBIT performance. Over the past 3 years, we have consistently demonstrated solid EBIT growth, and we anticipate this positive trend to persist. The foundations for this sustained growth lie in the expansion of our portfolio, robust asset quality, and notably a high level of customer satisfaction. And my purpose here is not to give you a tribe-level financial guidance. This is only our view on the consumer banking tribe ambition, and it does not include any deteriorating market environment or impact from larger partnerships or acquisitions. The current market conditions are stable, supported by a strong history of performance, a well-established market positions, a proficient team, and ample resources at our disposal. So over the past 3 years, we have not only met but surpassed our financial ambitions by exceeding 5% yearly EBIT growth. And we are poised to continue this trend for the next 3 years. And now thank you very much. And now I'm happy to pass the microphone to Mantvydas, the CEO of Business Banking.
Good morning or afternoon, everyone who is joining us overseas, and thank you for being with us. I'm Mantvydas, representing CapitalBox, a lighthouse of innovation in the fintech sector. Working for more than 17 years in the financial industry, from leading global credit insurance company in Baltics to creating a digital European license neobank, I am more than excited to be on board of a Multitude Group, being responsible for corporate banking. In the kingdom of a digital lending, we don't just participate, we lead. Our journey over the last 8 years has taken us across more than 5 countries, empowering over more than 7,000 businesses. Our more than 117 million portfolio is not just a number. It's a testament to trust and impact from our existing customers. So in the coming 10 minutes, I will lead you with our story and solution we bring to the market for the SMEs. You probably know that up to 99% of European business is being comprised by the SMEs, who provide nearly half of the jobs to European market. Yet they are financially underserved. Imagine you're running SME. You have innovative ideas, dedicated team, and a market tribe of your products. But when it comes to the funding, your door just closes. Banks often see small businesses as a high risk or too small to bother with. This is the core of the SME funding gap. It's a systemic issue where traditional financial institutions overlook the potential of small enterprises due to perceived risk and administrative burdens. In Europe, this gap is not just a small slot, it's a widening pit. Despite SMEs being the backbone of the economy, contributing 50% of the jobs, they're struggling to secure the financing they need to grow, innovate, or even just to survive unexpected challenges. The gap grows by 9% annually, not due to the lack of the potential in the sector, but due to the lack of the access of the funding. So when a pessimist sees the difficulty in every opportunity, we at the CapitalBox see the opportunity in the aforementioned difficulty. In this growing gap, we see immense potential, a chance to empower, a space to grow. So what is our answer to this mentioned challenge? We continue to the next slide. We see that our solution is a service that's not just a digital and online, but also deeply customized. We're not just lenders, we are architects of a financial future that's more inclusive and accessible. Our approach resonates with the needs of the today's fast-moving world. With every loan, we bridge a gap that traditional banking often overlooks. Our solution is mostly used by limited companies or sole proprietorships established less than 5 years ago, with average 300,000 euros yearly turnover, with the teams up to 5 employees. CapitalBox usually support companies for equipment financing, working capital, or as a driver for growing the business by providing an average funding of 20,000 euros. By understanding better the needs of these companies and structure of their financials, we can use available data and put the required funding in the right timing for businesses to grow. Thanks to our data analysis, we can predict better than the customer itself. By doing this, we can work in different industries and support different customer needs. During our history, we dedicated lots of our resources to create scalable system with API connections, enabling us to collect various data in no time. This is not only decreases the processing time for us, but also gives us broader view of the economy and a customer possibility to return the funding. In other words, we let our customers to focus on their businesses. So to make best bagels in the town or deliver your ordered goods on time. CapitalBox just takes care of filling the gas for those businesses and keep them running. It is simple. Our solution is customer focused, fast and efficient. We're breaking the barriers that banks can't, offering digital and online service tailored to SMEs' unique needs. So let's talk about the marketplace, the global marketplace of the fintechs today. If we can continue to the next slide, you will see that in the global marketplace, CapitalBox stands out. We focused on unbanked SMEs, a segment often abandoned. It's not just about lending, it's about understanding and serving this community. Our profitability in this niche is not just by chance, but by design, reflecting our strategic skills. So we see CapitalBox position as unique in this market. You would probably ask, so what is so unique about this? It is simple. During the long experience, we now understand SME segment deeper, wider, and much clearer. We know how their financials look and develop. We know when customers can borrow funds and how they will return it to us. In addition, we now understand differences of SME in the different markets. Despite the European Union is one market, there are different scenarios how to work in each economy. We learned it by doing, and now we can utilize these lessons. We separate from other known brands in the market by being very specialized, but also multi-country SME lender. To prove that this is not just a nice words for me, let's take a look inside of the CapitalBox. So the previous year was a canvas where we painted a picture of resilience and growth, decreasing credit losses while expanding our portfolio, which you will see in the next slide. We've demonstrated that prudence and progress can coexist. I have started as a CEO in the CapitalBox almost a year ago. I found a very good technical solution in place and wanted to try if we can really grow profitably with that. So this year, we already managed to strengthen the country management in Netherlands and in Lithuania. We launched new products like collateral lending in a couple of our countries, and we will scale to the other countries. We launched a credit lines in the Netherlands. We continued our automation journey in Finland and Sweden, and we launched in other countries. So the companies can borrow from us completely automatically without any involvement of our employees. Our both revenues and EBIT are on the rise due to the changes we made in the management. Net revenue grew by more than 11% and EBIT about 4 million euros. Our team spirit and customer happiness have really gone up as well, which is an important for us in terms of the progress we've made in the long run. And most probably all of you understand that such changes do not happen overnight, just having a nice and long sleep. This is a long trip we already made with my team, because without commitment, you will never start, but without consistency, you will never achieve the goals. From what is mentioned above, I'm more than confident that CapitalBox Foundation is stronger than ever before in our history. So what is next in our journey? In the next slide, you will see that the next 2 years are about scaling to new heights. We are harnessing innovative channels for customer acquisition and retention, ensuring that every SME that comes to us experiences a seamless, stress-free journey to financial empowerment. We see our growth strategy consists of 3 main pillars, as it was already mentioned by my colleagues. Let me explain more about those 3. So organic. We had only lending in our offer to the customers. But small, though complex companies need much more than this. They also need their everyday operations to take care of. Therefore, we integrate Swedbank solution of mobile app and daily banking to bring more benefits to our SME customers. This integration is designed to unlock cross-selling opportunities and enhance our operational scalability. It will also increase retention and lifetime of major part of our customers. Talking about partners, together with other fintech or service providers, we are going to offer lending solutions embedded into different customer systems. We already mentioned our technical solution as scalable and fully API-based. This opens the doors to accounting companies, marketplaces, POS providers, and many others. And last but not least is scaling with the help of other companies, which can use a synergy by merging with our group. We already are on the way to use those synergies, but only when there is a real value for the customer. We're looking to expand when it makes sense for us and is according to our vision. So, as you can obviously see, our journey is evolving, expanding beyond lending to a holistic financial suite. This evolution is about creating a multi-service solution where customers don't just come to us for a loan, but for a financial partnership that supports their daily needs. Automated workflows and expanding omnichannel capabilities mean we are becoming not just a lender, we are becoming as a lifelong financial partner for all the SMEs. Previously, we had 5 products. Now we will increase it to the other solutions together with the multitude and sweep in order to create stickiness to the customer. During 2024, we will deliver this solution, which is already in production at the moment, and offer it to all our countries. Our multi-service solution for small companies will give all essential financial tools, provide working capital, secure a banking account, and collect and send the company payments. Due to the fact that we have infrastructure ready in our group, we can utilize it in no time and just help SMEs by covering their daily needs and continue running everyday business. So finally, speaking about the potential, SME market is huge in Europe, but still leaving an enormous gap for CapitalBox to grow. On the left, you can see the biggest markets in Europe for SMEs, which remains as a main potential for us. With our data-driven approach, we are poised to capture a significant share of the Europe's lending market. Our created ledger and dashboards enable us to make smarter business decisions, predict cash flows, and monitor customer behavior to optimize our strategies. Just consider this potential. Total SME lending by all institutions to all companies with all products is about 7.3 trillion euros in Europe. The total potential for CapitalBox with existing and new products leads to 15 billion as a total potential size of the portfolio. Currently, we take only 1% out of this, but due to all the reasons mentioned in my presentation above, we have a clear potential for exciting growth here. So we can continue to take banks rejected and unbanked customers and fund them according to our credit risk practice. This isn't just a goal. It's a clear, attainable vision. As we often say, the only way to predict the future is to create it. So in conclusion, let me leave you with this thought. In a world rapidly shifting to digital, CapitalBox isn't just keeping the pace, we're setting the pace here. As a purely digital online lender, we're not just proving our concept, we perfected it. Our niche in the SME lending isn't just a business choice. It's a commitment to a sector that's a backbone of economies, yet often overlooked. We're not just part of the future, we're helping to create the future. Thank you for your time and belief in our journey to redefine SME lending. Thank you.
Thank you, all speakers thus far. We will be now taking a brief 5 minutes break. So we will be back at 11:15. But in the meanwhile, we kindly invite you to explore the Multitude website at www.multitude.com. There is a lot of information and resources for the investors, analysts, and any interested parties. Additionally, we encourage you to follow our LinkedIn profile, because we are quite frequently sharing updates and upcoming events in there as well. So thanks for your attention and enjoy the break. Welcome back. We are now ready for the second part of our Capital Markets Day 2023. I'm happy to introduce you Antti Kumpulainen, the CEO of Multitude Bank. Please go ahead, Antti.
Thank you, Lasse. And thank you for the interesting presentations, Kristjan and Mantvydas. There's truly great opportunities in both consumer lending and SME business as well. Hello, everyone. I'm Antti Kumpulainen. I'm CEO of Multitude Bank. My journey in Multitude started almost 8 years ago in 2016, after years of working with payments and lending. I have been the CEO of Multitude Bank since 2021, and I'm also currently leading our newest business unit, Wholesale Banking. In the following slides, I will guide you through what wholesale banking in Multitude is and explain why we have entered this new business line. At Multitude, we boast extensive experience in lending and fintech. Recognizing the pain points and opportunities in the industry, we do understand that traditional banks may not always possess the necessary knowledge to cater to the needs of our industry peers. With our customer-friendly solutions, we are well positioned to bridge this gap. Having successfully addressed these challenges for ourselves, we have extended these solutions to be available for others as well. We have a unique solution, which is initially developed to support our Ferrratum, Sweepbank, and CapitalBox tribes, and we are now ready to offer our solution to others. Leveraging our exceptional industry understanding, we can empower others to grow alongside us. Within our payment platform, we have the necessary elements in place for real-time payments, multiple currencies, virtual accounts, and various setups crucial for end-to-end successful payments operations. Our world-class risk management tools, coupled with our successful experience in understanding and managing consumer and SME lending portfolios, position us as experts in lending dynamics. Utilizing our scalable deposit funding, collection expertise, and the power of data and AI, we can provide attractive and profound funding solutions. The secure debt product offers an ideal means of financing loan portfolios and other assets in an efficient manner. With deep knowledge in different regulatory frameworks, we can seamlessly provide our solutions in multiple jurisdictions for the fintech industry. The offering and services mentioned earlier are poised to cater to banks, payment institutions, and electronic money institutions in their business and growth. Our payment platform supports core payment processes, serving as a reliable daily business support or a fallback option for managing payment trails, facilitating both receiving and making payments and managing accounts efficiently. For alternative lenders, fintechs, and investment companies, our scalability extends to funding, risk management, and underwriting experience. We have successfully introduced diverse funding solutions, utilizing lending portfolios as collateral. The global portfolio management knowledge and experience accumulated by Multitude over the years provide us with a unique edge in comprehending counterparty risks. This allows us to tailor solutions that offers us the required collateral and, on the other hand, funding to the client with swift execution and transparent, favorable terms. Alternative lenders, fintechs, investment companies do seek funding to scale up their operations, often facing challenges due to limited access to deposit funding. Understanding of the different business models amongst traditional banks is limiting the access to funding for these companies. Alternative lenders without deposit-taking possibilities do have 15.7 billion euros in net account receivables in Europe. This market is now ready to be served by Multitude. Multitude has cultivated expertise in lending since the beginning of our journey, particularly in understanding the dynamics of consumer and SME lending, which is a cornerstone in our risk management approach. This expertise now translates into our secure debt offering, utilizing scalable deposit funding and portfolio management know-how to extend our impact in the wholesale market. The product itself, that's straightforward. We provide secure funding against lending portfolios or other assets which are pledged to Multitude as collateral. This collateral not only serves to mitigate credit losses, but is also subject to in-depth monitoring throughout the funding lifecycle. Our funding options range from 5 to 20 million euros, with maturities extending up to 48 months. Our efficient risk management tools and data utilization, both internally and externally, enable the swift underwriting process, which is typically concluding in about 2 weeks. The whole process is typically concluded within about 6 weeks, thanks to our robust experience and digital approach. Multitude seizes the opportunity to thrive in the market where substitutes at the moment are somewhat limited. Our extensive industry knowledge and broad contact network provide a robust pipeline to facilitate our growth. Efficient, accurate, and swift payment processing is a cornerstone of any fintech, and Multitude understands this crucial aspect. Our real-time payment platform, initially developed to serve our own tribes, is now poised for scaling up to cater to payment institutions, electronic money institutions, and fintechs. In Europe alone, there are over 6,000 electronic money and payment institutions together, and many of those are actively seeking for alternative payment options. This provides us ample opportunities to find the right partners to serve through our platform. We do offer real-time payments to process large payment volumes in various currencies. The experience gained from servicing Multitude Tribe has proven that the platform's effectiveness in multiple jurisdictions where Multitude operates. Transaction monitoring is extremely paramount in payments. Leveraging our real-time monitoring, AI, and various RegTech solutions, we are well positioned for this critical aspect of payment business. Our clients can grow with us both in volume and also geographically. Looking ahead, we plan to scale up our offering in 2024 by adding more customers to our platform. We are set to scale up our wholesale banking offering in 2024. Over the past 12 months, we have successfully piloted the product and offering in warehouse lending. Our real-time payment platform is already operational and poised for expansion. The team is in place, the processes are in place, we are ready to execute the existing pipeline. In a strategic move, we are making changes to our operations and communication. Starting from January 1st, wholesale banking will emerge as a new tribe in a multitude, and we will rename warehouse lending to secured debt in all of our communication. Post the pilot phase, it's time to provide additional focus for the new tribe. The recruitment of a new tribe CEO for wholesale banking is progressing well, and I hope that I can share some positive news about that in the coming months. With the concept proven to work, we are thrilled to see the new tribe concentrating on growth in 2024 and beyond. Thank you on my behalf, and I would like to pass on to our CTO, Kornel Kabele.
Thank you very much, Antti. Welcome, everyone. My name is Kornel Kabele. I'm Multitude's Chief Technology Officer. My journey at Multitude began 6 years ago, and I'm thrilled to share with you our transformative impact of our cutting-edge technology and artificial intelligence, which is enabling our business scalability, competitiveness, and operational efficiency. At the heart of our digital native business is a range of technological capabilities, each tailored to meet the unique needs of today's banking customers. These in-house innovations add value by securing and automating operations and elevating the customer experience, using data insights gained using AI and machine learning, positioning us at the forefront of the modern banking. Let's dive deeper into the Multitude's technology platform. At its core, digital banking is about the user experience. Our user interfaces are designed to be simple and enjoyable. We enable integration with various platforms and services through our robust APIs, ensuring our customers have a unique and unified holistic banking journey. APIs are an important component of our business, as Kristjan, Kajakas, and Mantvydas, Štareika mentioned earlier. We have over 120 partners connected to our systems, supporting seamless customers' journey. The foundation of any successful digital venture lies in its architecture. Our high-performing, event-driven platform is crafted for efficiency, scalability, and reliability. By leveraging modular and integrated design, we have built an architecture that can adapt and expand, ensuring seamless operations regardless of volume or demand. Our robust platform integrates over 400 microservices and business applications seamlessly, and we release a new production change every 2 hours. Personally, I think it's incredible that a regulated financial institution releases 300 deployments per month. Why does it matter? Because it enables our business exceptional agility. Insights fuel the engine of innovation, and in Multitude, data drives decisions. We have 20 years of historical data from various regions, and this is our strong asset. Our advanced analytics tools reveal insights about customer behaviors, market trends, and operational efficiencies. This enables us to make more informed decisions, tailor our offerings, and consistently stay ahead of the competition. We are living in the age of smart banking. While we see nowadays that AI hype is taking the world by the storm, for us, it's not a foreign technology. We are already delivering personalized experiences, fast and accurate scoring, optimizing operations, and detecting anomalies in real time, thanks to the power of artificial intelligence and machine learning. This technology allows us to anticipate customer needs and provide solutions even before they realize they need them. In today's volatile market, agility and flexibility are essential. Bernd has already mentioned aspects of the financial stability and resilience. We also ensure strong operational resilience, availability, scalability, and efficiency by combining our on-premises and cloud computing capabilities. This technology choice not only reduces our operational costs, but also ensures that our company can quickly adopt modern technologies and is accessible anytime and anywhere. Trust is essential in digital age. Our extensive cybersecurity measures protect our customers' data from threats, fostering a trusting environment. By investing into the best security tools and practices, as well as over 12,000 hours of training of our employees, we are not only protecting our customers, but also ensuring our business longevity and trustworthy reputation in a digital-first world. Multitude is not just a financial institution, it's a technological pioneer. We are deploying cutting-edge AI solutions across the entire customer lifecycle. And I'm excited to share how this strengthens our company's competitiveness and scalability. The journey begins with customer acquisition. Our AI-driven strategies target high-value customers by utilizing optimized target return on ad spend and state-of-the-art value-based bidding to maximize each customer's lifetime value. Advanced AI-based models outperform outdated methods in credit scoring, providing a more nuanced understanding of credit risk. It's not just about reducing risk, it's also about unlocking potential, precisely segmenting customers and forecasting their future financial trajectories. Imagine a world where customer service is not only responsive, but also predictive. 75% of queries are handled by our AI-powered chatbot, which can assist customers in 16 languages. This efficiency isn't just about cost saving, it's also about customer satisfaction. Our sentiment analysis and personalization techniques lead to deeper insights and stronger customer relationships. Our real-time active account scoring model is a game changer. This means offering credit limit increases at the perfect moment, anticipating defaults, and identifying cross-selling opportunities. Finally, our AI technologies transform the collection process. By prioritizing strategies and optimizing selection, we are not just collecting debts, we are preserving relationships. This efficiency increases our bottom line and keeps our customers' loyalty. We are also using AI and process automation to revolutionize our internal productivity and operational efficiency. We highly value our diverse global talent. We are curating a workforce of exceptional talents using AI-supported talent recruitment. We can identify and recruit the best talents faster from any location, thanks to automated resume screening and scoring for the right capabilities and expertise. Knowledge is power, and our ChatGPT-powered conversational intranet puts this power at our employees' fingertips. By enabling them to find information, share knowledge, and collaborate using natural language, we are getting new insights, streamlining communication, and boosting productivity. Our Copilot AI assistant is transforming the way our engineers work by generating context-relevant code, tests, documentation, and automating repetitive tasks. This not only increases the productivity, but it also improves the quality of our software solutions, making them more robust and reliable. Our fully automated customer onboarding and payments disbursement processes represent a significant improvement in operational efficiency. We ensure that our services are not only faster, but also more accessible by automating these key processes, laying the groundwork for rapid and sustainable scaling across multiple countries. Finally, our machine learning and artificial intelligence solutions used for fraud and anti-money laundering analysis detect suspicious activities more accurately and swiftly, ensuring compliance with regulations and financial security. Now, I would like to hand the stage over to our Chief Risk Officer, Clemens Krause. Thank you very much.
Thanks, Kornel. My name is Clemens Krause. I'm now 12 years with Multitude, and I want to introduce you to our fantastic risk world. Let us go to the first slide. This is the generic USP of Multitude. We saw it from Mantvydas for the CapitalBox. We saw it well explained by Kristjan in Ferrratum tribe. Generically, it is about making lending easy, fast, convenient. We ask as little as possible from the customer and gather as much as possible information in the background to make a sound and high quality credit decision, ideally instantly, wherever the local setup allows this. Otherwise, it takes seconds up to a minute, and then we have a credit decision for the customer. And then also the time to pay out matters. We seek, wherever possible, instant payments. And where this is not possible, we seek a payout time within below 15 minutes. This lets the customer solve his financial challenge within seconds, within minutes, and always very convenient and nice. And this makes our customer base very loyal. We have about 80%, 78% of our business from recurring customers. And here in our credit decision process, we use AI-supported scoring solutions. We achieve with new customers a Gini of 55. What does this mean? A Gini is a quality measure for a scoring. 0 means no relevance, no distinction possible, 100% perfect distinction between good and bad. Benchmarks are typically 40% plus. We are 10 percentage points higher with new customers, and with existing customers, we achieve in all markets a level of more than 70%. And this also makes the company resilient. The revenues are stable. 80% is from recurring customers, and the payment behavior of recurring customers is many percentage points better than from new customers. Let us go on the next slide. So, big data is our reality. We start to collect data once the customer lands on our webpage. It starts with simple things, how the customer fills in the application. Is this too fast? Robots have a certain pattern to type in the data quite quickly. Human beings have a certain rhythm. We can see this. We can identify this. We use this for fraud identification and for credit risk scoring. It matters whether the customer puts in his data with a copy and paste or whether this is manually typed, how long it takes, and so forth, and so forth, and so forth. I can talk hours about this. And then sales channel, browsing behavior, marketing analytics play a significant role. Is this customer coming from a broker channel, from an affiliate? Is it coming as direct business to our one, to one of our web page? It matters. All sales channels have different payment behavior, different customer lifetime value. So we are collecting these data because we are using this to select the right customers. Fraud prevention, we are able to use the IP address as far as possible, device data, geolocation. If certain requests come from a location in Africa, this is typically a fraud pattern, or somewhere in East Europe. Ukraine has been a place of systematic fraud that we experience from there. Let me move on. I'm going too deep. Credit bureaus we typically use. This is some fundamental. PSD2 data, fantastic data world, very telling, and more used, it improves the Gini wherever we can use this fully by easily 10 percentage points. And the mobile wallet is also a fantastic data world. We achieve up to 500,000 data points for each customer. And this is the basis for our decision engine and the basis of developing the customer lifetime value over time. Let us go on the next page. So many companies talk nowadays about AI and position themselves as AI experts. Here we can say Multitude is using digital lending and AI solutions since 2005. I can say I introduced a credit rating system based on neural networks in 1992. I got a doctor's degree for this. I got a summa cum laude, University Award, scientific publications, and this was adopted by banks and leading consulting companies. This is true pioneership combined now with me at Multitude. And here we use AI solutions all over the lending process. In customer acquisition, I mentioned on the previous slide, the channel matters for CLV. We know if customer comes with a certain search word, what the value of the customer is. And we have value-based bidding. So for these customers, with this search word, we can pay up to whatever amount it is. We use chatbots for converting customers, but also in operations and collections. Credit scoring, we have touched a fantastic data world. We use it in underwriting. This is the essence of all what we do, but also in other areas, in collections. We know certain customers, the pattern. We've done a sound cluster analysis. This customer is paying typically a few days late, needs a reminder email and pays. This is a customer who pays only with the last letter and reminder and requires intensive work. We know the patterns, we have flexible process for this and so forth. Retention, active account scoring is one other very important element, especially for our core product credit limit. It is working extremely well. We do not only see the repayment rhythms and patterns, we also see the withdrawal patterns and the usage of this. And it's an extremely good database. We have developed the active account scoring in a sense that we can predict the payment behavior, but also the churn. If customer gets less and less active, it's likely that he walks away. So we intensify communication and motivate to stay with us. And at the bottom, the customer lifetime optimization, we have developed a multi-dimensional model, which tells us micro loan customer, plus loan customer, prime loan customer, credit limit customer, in this score class, in that score class, in this country, we have dedicated values for this and patterns. I need to move on. Next slide, please. Here, the outcome of this is payment behavior. Payment behavior is something that I monitor daily. One leading and simple KPI is the first invoice days past due day percentage. So 7 days past due date, we have maybe 70% of all invoices paid back. And the black line is the 30-day BT counter, where we have typically 85% paid back. And this tells us over time how the underwriting was. Did we make an underwriting change in a certain month? The pattern changes from one cohort to the next cohort, from one month to the next month, and we can measure on this basis whether the underwriting decision, the limit increase, the new score class that we allowed was a good decision or not. You can see also operational topics. The August line has a small ditch. This was a pre-collection process where we tried to change something. It was not good. We reversed it and it normalized in September again. This tells us about the quality of new business. Let's talk about the portfolio. Next slide. So all our invoice DPD counters are used to see what is happening in the portfolio. This is, for example, important if you want to know if there's a market effect. We have a challenging macroeconomic environment. How all our customers are doing. As you can see, it improves. The dotted lines show the self-set targets. We have set ourselves for this year higher targets, and we made it. We are on track with the 7 DPD line and the 30 DPD line. And on the top, you see the 90 DPD line where we achieve levels of more than 90%. More than 90% have paid back by 90 days past due date. And now I need to explain what is behind these DPD lines, the payment behavior. Let's go on the next slide. Yes, so behind this, we have a well-developed collection process. We have early collections for our customers. Some customers might miss to pay an invoice in time. We have a process which starts with pre-collections 2 days before the invoice is due. We remind the customer that there's an invoice coming. We start messaging after due date again. For certain customers, we set up calls, we send letters, and only for those customers who are not responsive, don't pick up the phone, don't show any sign of cooperation. At some point in time, we need to terminate the credit contract and make the full amount due. This is happening. We have extended this over time. This is happening at around 90 days past due date. So 2-3 invoices are typically outstanding at this point already. If we then can't get an agreement with the customer, as said, it's terminated. And then in 9 countries, we have achieved a forward flow agreement. We sell these claims for a fixed price to a third-party collection company. And in other markets where forward flows are not available, we give this over to a third-party collection company for servicing. They apply their standard processes. We only use blue chip collection companies. And once we have enough volume, we make a one-time debt sale. In terms of numbers, the recoveries with forward flows were in 2022, 28 million. And the recoveries from one-time debt sales were 31 million. We achieve values between 40 and 80% for those defaulted claims, which is a pretty high percentage, more than most people expect, because our claim sizes are typically small. Customers can recover on this. And this gives us also a high level of robustness. I need to speed up a bit. Next slide. So here, just shortly, the structure of our credit portfolio. Dominant is Ferrratum, and then Sweep and CapitalBox are slightly smaller. In Ferrratum, credit limit is the leading product, but also in CapitalBox, we have now almost 50% of business volume with a so-called credit line, which is a related product to the credit limit. And geographically, we are, as a Finnish-based company, quite logically strong in the Nordics. So the Nordics, a very stable political and economic region of Europe, is our geographical gravity center. Let's move on. Next slide. So this is a slide which bridges from the finance part from Bernd. We have a for over years now a trend of decreasing credit losses over net AR. It's also called loan loss ratio. This trend continues. It has to do that we develop our credit products, we get away from microloans to more sophisticated lending products, and together with more and more recurring customers, we can improve our credit losses over time. Next slide. Most interesting on this slide is the left part, where we can see the portfolio broken down in the so-called others 9 stages. Stage 1 is performing loans up to 30 days past due date, and this is the majority on our balance sheet. Stage 2 is underperforming loans that get overdue by more than 30 days. And then stage 3 is loans that get defaulted, typically after 90 days past due date. And you see the volume is quite small, and it's decreasing over time through our successful and better working debt sale processes. Let's go to the next slide. This is now the same breakdown in stages, but now as gross amounts. So the nominal and outstanding is bigger than what you could see in the balance sheet. And on the right side, you have the according risk provisioning reserving percentages. And you see that at the end of Q3 this year, the reserve percentage for performing loans is 5%. This means if you pay out a 1,000 euro loan, we reserve on the right away 50 euros as front up reserve. We haven't seen any revenues from this loan yet. And this is the kind of expected credit loss based on PD and LGD. And you can also see the percentage has gone down because we have improved on both the PD and the LGD. And the other element that I want to highlight shortly is reserving percentage for non-performing loans is above 60% and is matching to the recovery rates and forward flow and debt sale prices that we record every year. Last year it was 15 one-time debt sales. This audit focus every year, and very important to be there well calibrated with market values and recovery curves. Let us move on. Next slide. So the takeaways that I want to give you is underwriting is truly state-of-the-art and AI-driven. The payment behavior is stable. It does not translate every quarter into credit losses in the same way. Midterm, they are perfectly correlated. Short-term, you have in our credit loss model some volatility, which has to do with the volume of non-performing loans, then they get sold off, we have a release of reserves and so forth. There's some natural volatility over time. Most important is, even in current times, our payment behavior is stable. The credit portfolio is well diversified with good products, many customers, and good geographies. And the assets are high quality, well reserved, well risk provisioned, and with this pattern of small consumer lending and small business lending, we have a high resilience to difficult market conditions as well. And now I would like to pass over to Shaun, our head of HR.
Thank you, Clemens, and thank you for joining us today for Multitude's Capital Markets Day. So as Clemens said, I'm Shaun, I'm Chief HR Officer at Multitude, leveraging 2 decades of expertise in human resources across various international industries. Having joined Multitude 5 years ago, I feel privileged today to be the one representing the heartbeat of Multitude, our people. So it's crucial to recognize that in today's dynamic landscape, our human assets is what differentiates us from our competitors. Our people are the driving force behind our profitability and enhancement of shareholder value. Today, we will journey through our commitment to actively engage both employees, our leaders, and also our dedication to recognizing and fostering their development and the pivotal role that diversity, equity, and inclusion plays in the bedrock of our success. As Jorma and Lasse already highlighted earlier, our approach to talent acquisition is a continuous evolution. So we don't just seek talent where it is convenient or where it is easy, but we seek it where it thrives. A few years ago, while simultaneously navigating a severe microeconomic environment, we underwent a significant shift towards an enterprise agile model and also embrace a hybrid way of working. And true to our nature of inclusivity, our decision to adopt a hybrid working model wasn't made behind closed doors in some boardroom, but we engaged our people through a number of surveys and discussions on a way of work that best suits us at Multitude. The result was crystal clear at the time. So a hybrid model aligns perfectly with our values. And this cultivates a culture where every individual feels that their voice matters, which is a fundamental strength for us here at Multitude. The shift inadvertently has further enabled us then to source the global talent irrespective of geographical boundaries. So at present, our team spans continents with over 700 talented individuals from over 40 nationalities, distributed across more than 25 locations, with significant presence in Malta, Slovakia, Germany, Finland, Lithuania, Philippines, Estonia, and Sweden. So in essence, our commitment to embracing diversity is a cornerstone of our approach to innovation, growth, scalability, and sustainable success. So together, as we continue to evolve, our people remain at the heart of what makes Multitude truly exceptional. So in this slide, we'll talk a bit about gender diversity, we'll talk a bit about our talent, and as Multitude, we are proud of our differences, being it gender, being it identity, beliefs, values, skills, experience, and socioeconomic factors. So our commitment to diversity extends beyond the checklist. It's about embracing the richness of experiences that our employees bring to our teams, making us stronger and more dynamic. We understand the importance of quotas, and for us, more importantly, the essence of creating an inspiring and open environment. Our pledge is to cultivate a workplace where every individual feels valued, believes they can make a meaningful impact, and most importantly, have an equal opportunity to deliver their best, to thrive and to grow within Multitude. As you can see at the top of the slide, currently, our workforce is composed of 44% females and 56% males, demonstrating our dedication to gender equality in a fintech environment. Within our managerial ranks, we have 56% female managers and 64% male managers, with a board composition of 33% females and 67% male. Looking ahead, our target is to achieve a 38 female composition in both management and the board by 2025. Additionally, as part of a number of initiatives in the EU Diversity Month, we conducted an internal survey where over 79% of our team defines diversity as encompassing multiple races, ethnicities, gender, and nationalities. 83% feel that Multitude genuinely values a diverse and inclusive environment. This, for us, reflects not only our team's understanding of diversity, but also their confidence in the inclusivity that we strive for at Multitude. It's also a testament to our shared commitment to fostering a workplace that embraces and celebrates differences. If we go down to the bottom part of this slide, here we are looking at our talent pool, right? And our talent pool spans diverse disciplines, with over 40% of our talent coming from technology, risk, and data, which mirrors our business model, demonstrating how we strategically allow our teams to effectively serve our customers. Moving on to development, we probably witnessed 80 employees ascend to new heights over the last 12 months within various fields across the company. Additionally, in a recent internal learning and development survey, 75% of our employees feel confident that they can develop their careers with Multitude. This exemplifies the significance we place on fostering talent from within. illustrating that the success of our people is intricately tied to their development within Multitude. Highlighting the strength and stability within our workforce, our team has an average tenure of 3.5 years, which, if you look at the industry standard in fintech, it's around 18 months to 2 years. Looking forward, our aim is to further enhance our average tenure, aspiring to surpass the 4-year milestone. This ambitious goal reflects our ongoing commitments to providing an environment that not only attracts top talent, but nurtures their long-term professional growth within Multitude. In essence, this snapshot reflects our commitment to diversity, inclusion, and the continuous evolution of a workplace that values every individual's unique contribution. Good. If we go to the next slide, we'll talk a bit about people happiness, where since 2020, we have utilized the employee net promoter score as a crucial metric to gauge the happiness and satisfaction of our team. This gives us a clear understanding of how our people perceive the company, highlighting both areas of strength and additionally those that need improvement. As we navigated, as you can see, the diverse macroeconomic landscapes and transitioned our organization into an enterprise agile model, we initially witnessed a dip in our eNPS, which was expected during this transformative period. Today, we stand resilient, having transitioned from the norming phase and now reaping the rewards of a performance-oriented stage. Looking ahead to 2025, our target is an eNPS score of 25. So, through a series of employee surveys, our workforce has expressed their appreciation for our hybrid work model, emphasizing factors such as work-life balance, growth opportunities, flexibility, autonomy, and a thriving culture built on strong values, exceptional teams, and a shared vision and mission. In essence, our eNPS journey mirrors our organizational evolution. So from challenges and transitions to resilience, and ultimately a stage of performance excellence. As we continue to listen to our team, adapt to their needs, and enhance our employee experience, we are confident in our trajectory towards achieving our 2025 eNPS target, which further solidifies our position as a workplace where talent thrives and satisfaction prevails. Good. Moving on to the next slide. I think we need to go a slide back, please. Can you move on to the next slide, please? Okay. Good. So, thanks. So, as Jorma already emphasized earlier, our commitment to 5 key values serve as the very essence of our belief system, acting as the guiding compass for our decision-making process. So, to keep our values at the center of all that we do, we took a further step in our strategic HR framework, where in a collaborative effort with our employees, we identified our core competencies, delving into both internal and external teams that hold significant resonance with the diverse landscape of Multitude. This process serves as another example of how we seamlessly integrate diversity into talent development. Our top talents from around the globe actively participated in this exercise, which provided us with invaluable feedback on the competencies driving their success. Our core competencies were born through the integration of diverse perspectives. So what are the core competencies? So for us, the core competencies are the DNA, so the essential ingredients of our success within Multitude. They offer clarity on what Multitude accepts from all our people across the group in both their current and also their future roles. So as a Multitude employee, regardless of location, the core competencies remain the same. They are not just guiding principles, but they also direct us on where to invest and allocate resources, how to measure and monitor our progress, and ultimately how to drive the vision that my colleagues just shared before me. So the core competencies are being embedded in all of the people-related processes, including talent acquisition, internal people benchmarks, and unified measures, training and development, as well as succession planning. So these success behaviors not only lead to individual success, but also contribute to the overall success of Multitude. In essence, we are looking to embed the core values and competencies, which is a dynamic process. That this also reflects our adaptability, inclusivity, and dedication to fostering an environment where every individual can thrive and contribute to the collective success of Multitude. So here we wanted to also highlight how we look at talent, right? And the three key pillars that drive our talent strategy. So firstly, it is starting with the nurturing of our growth, where we believe in building from within. So our internal development programs are designed to nurture and grow our talent, and all our employees additionally have access to over 30,000 on-demand courses that support development of our core competencies and also technical skills that make our team excel. Additionally, we have internship programs and annual leaders meetups that further contribute to fostering a culture of continuous growth. Moving to global talent, obviously we spoke already about this earlier. So we have undergone an organic shift in perspective over the years, especially with the adoption of enterprise agile way of work and hybrid working model. This enabled us to seek the best talent irrespective of geographical boundaries, where we've transitioned our hiring strategy from central hubs to a more global approach. This strategic shift ensures that we tap into diverse skills and perspectives worldwide, which further fortifies our diversity to fuel growth, innovation, and scalability. Lastly, it has been already mentioned a lot as well when we talk about AI and automation. This also are two powerful tools that we see integral to optimizing our resources. So this strategic incorporation of AI and machine learning into our operations is becoming increasingly central to our processes. So by harnessing the power of automation and AI in the people processes as well, we empower our leaders to lead more effectively, while enabling our talent to focus on value-added tasks beyond the capabilities of automation. So for us, these three key pillars form the cornerstone of our talent strategy, which embody our commitment to nurturing and embracing global perspectives, and additionally leveraging cutting-edge technologies to drive both our organizational efficiency, innovation, and growth. Good. Last but not least, I wanted also to highlight how we incentivize our people. So we have a passion for performance, and as seen from the presentations of my colleagues before me, we take pride in living up to our commitments. So over the years, we also have strategically crafted incentive plans that align with our vision, effectively cascading our strategy and propelling our performance to new heights. Our incentive structure comprises both short-term and long-term components, each tailored to support our overarching goals. Starting off with the short-term incentive, our biannual cash incentive plan aligns leaders and chapter leaders and business drivers with targets, both financial and strategic, cascaded from the global strategy via periodic objectives and key results. This approach ensures that our teams are strategically aligned with the broader organizational objectives. Turning our attention to the long-term incentives, we have two distinct programs: the matching share plan, which is available for all employees, and the performance share plan, specifically designed for leaders and business drivers. So in 2021, we introduced the matching share plan, which provides all our people with the unique opportunity to become shareholders and share in the company's success through an increase in share value. Additionally, the company grants free shares at 1:1 ratio. So all our employees can invest a percentage of their gross salary in Multitude shares twice a year, with a 2-year holding period. Since the inception of the program, our employees have collectively invested over 1 million euros, which demonstrates the commitment and belief in our shared success. The second long-term incentive, our performance share plan, offers our leaders and business drivers an opportunity to earn company shares as a reward, which is based on the targets that increase the shareholder value for the performance period. So our performance-driven incentive structure is a testament to our commitment to excellence, which ensures that our teams are not only motivated in the short term, but also actively invested in the long-term success and growth of Multitude. So before passing on to Nontokozo, I wanted to conclude by thanking you all for joining us today, where we've delved into the heartbeat of our organization, our people, where in a dynamic market, our human assets set us apart, driving profitability and ultimately shareholder value. Today, we explored our commitment to diversity, talent development, and the performance-driven culture. Our workforce spanning over 40 nationalities, which embodies the richness of experiences that fuels our success. In conclusion, Multitude is not just a company, it's a community where every individual's contribution matters. So our commitment to diversity, talent, and performance positions us for sustained success in the evolving landscape. Thank you for being part of our journey. I would like to introduce now my colleague Nontokozo, Khumalo, our Group ESG Officer, who will take you through our ESG journey.
Thank you, Shaun, for that presentation. So I will start talking about how we are a responsible financial services provider for the overlooked customer. My name is Nontokozo Khumalo. I'm the Group ESG Officer at Multitude. And just a little about me, I joined the company at the end of 2021, at the very start of our ESG journey to build up our approach and programs, having spent some time in the traditional banking and asset management sectors, working on sustainability. At that time, there was an increased interest in social and environmental issues with everyone coming out of the COVID pandemic, and also Multitude was positioning to engage more on social impact. It's been a tremendous journey, laying the foundation alongside my colleagues across the globe, and I'm excited as we now chart our next phase as an ESG-driven fintech, as Jorma mentioned earlier. On this slide, you can see basically that our business activities at the heart generate positive impact. And I'm going to start a bit about that, talking about how we actually show positive impact creation with social value drivers that you can see on the left. And then on the right, you can see our impact. Our value to society is actually derived from diverse skills that Shaun has also mentioned, technology, partnerships, as well as responsible customer selection. Our commitment to sustainable value creation is led by our vision and mission and demonstrated by an inclusive product offering that minimizes environmental impact. Our 3 ESG priorities are to future-proof our environmental impact, ensure social parameter-aligned access to financial services, and embed governance that truly transforms ESG performance to align with the global transition. Multitude is well-positioned, offering digital, paperless, cardless banking and services, and also utilizing cloud technology, as was mentioned earlier. And also we are, of course, working in our hybrid model for all our colleagues across the world. Through our value drivers and our product offering, as well as these ESG priorities, we're responsibly serving the overlooked customer whilst contributing to broader societal objectives of skills and local economic growth. Moving on to the next. Okay, that's fine. On this slide, you can see our 3 strategic priorities and goals for 2025. Social impact is at the center of our approach. And this means having in place mechanisms to improve our employee and customer well-being. At the very left is our environmental focus, and we are cognizant of the rising imperative to address environmental challenges. Our aim is really to be part of the solution, understanding our impact and setting targets. Our environmental and social objectives can only be achieved through good governance. So to this end, what we have been doing at Multitude is embedding ESG conscious practices with governance fostering transformation, as you can see on the right with our 2025 goals. Then moving on to the next slide, environmental. So what we were doing about setting future-proofing environmental impact, we want to understand this impact. So in 2023, what we started doing was reporting on our carbon emissions. we took up the hard work first. So we started tracking our small business lending impact, and the relative emissions are seen on the table on your left for 2022. We've been gradually addressing SME data gaps and expect to continue to make progress in the coming months. Still, with regards to SME lending, we're setting a relative target of 20% reduction of emissions per 1 million euros financed by 2025. This is from a level of 203 tons in 2022. We're very cautious of the SME target setting due to the existing data constraints in this customer segment, whilst also being very proud to be one of the leaders. We're broadening our financed emission scope of coverage to larger businesses in the warehouse lending segment. And we've recently joined the Partnership for Carbon Accounting Financials, PCAF, which will help to further strengthen our efforts with regards to financed emissions reporting. In our operations, we are reducing emissions by 20% for 2025 and aiming for net zero spend-based emissions by 2035 and 2030 for our global offices with regards to electricity and heating. Then on planned actions to meet our targets shown on the right, in addition to PCAF membership that I've already mentioned, our actions will now focus on having a deep understanding of our businesses and corporate lending, as well as steering actions towards positive outcomes. Then moving on to the next slide. Our next priority, social parameter aligned access to finance. At Multitude, the well-being of our customers and employees is a central pillar in our approach, and we believe that the ability to actually be a responsible financial services provider is most evidenced here in the center. This means not only enabling socially inclusive products and services, but also ensuring that we protect vulnerable customers through responsible lending and customer education. So on the left, on the table, you can see our key social metrics and targets for 2025. Our largest business unit, Ferrratum, pioneered the Responsible Lending Index to monitor customer protection. The Responsible Lending Index comprises 3 components relating to 90 days past due, a customer service survey that actually addresses topics like transparency on product terms, as well as gender diversity outcomes mentioned earlier. And then the index score maximum is 5 and currently stands at 4.3 with a target of 4.5 shown on the table. Our employee well-being is monitored as well, with a key metric being in eNPS that Shaun also spoke about, and we're very proud of our progress towards improving the eNPS. We're also monitoring diversity and benefit from a diversity of skill set, nationality, gender, and age. We've set targets to have 38% of women on the board by 2025, shown here in the table, and this is currently at 33%, which puts us on track to meet our target. Our actions going forward are about strengthening the monitoring of well-being of stakeholders and also leveraging the knowledge that we have across our teams in order to drive insights-driven approach with regards to addressing stakeholder well-being. Then finally, when it comes to governance, early on in our ESG journey, we recognized the pivotal role of governance when it comes to embedding ESG. So we immediately set up the ESG steering committee, which currently comprises some leadership team members and is co-chaired by the group CEO, Jorma. This laid the foundation for ESG to really be set, tone from the top led, actually, with regards to how we manage ESG across the company, as well as transparent communication across stakeholders, also supported by the board, who supported integration. And then these activities will continue to be strengthened to drive further embedding of ESG, addressing topics that some of which you can see on the right, such as sustainable finance and materiality determination, amongst others. Then in terms of the next chapter of ESG, in the next slide, we're basically focusing on how we can be more conscious when it comes to evolving stakeholder needs and be transformative of our business. This means where we previously focused on defining policies, we will now focus on strengthening monitoring, defining impacts, and mitigating actions. So we know that to be a fintech that truly provides responsible financial services for the overlooked customer, we need to be able to demonstrate future-proof products and services, to measure what matters, and to show leadership in embedding ESG. Thank you. I will now hand over to Jorma.
Yeah. Thank you to all speakers. It has been a long day, and now we are moving to the final part of the presentation, which is the questions and answers. We have received tens of questions, but as we have limited time on our hands, we can only take few questions at this time. So if we are not able to answer your question now, please let's take a separate occasion to go through those questions. But now, if you would like to ask a question, can you please raise hand in the tool so that we are seeing who would like to ask questions. Okay, now we got right away a few questions here, and I think maybe if we take the first question from Marius Furberg from Warburgs. Marius, the floor is yours.
Yeah, hi, thank you. Maybe let me begin with the first question on your integration of Swedbank into your other tribes now. And I'm particularly wondering why you haven't took this step earlier on, and what prevented you from distribute your Swedbank products across basically all other markets and regions before, and what makes you the decision to do it now?
Hi Marius, maybe I can take over that one, and then afterwards the Bernd, maybe you can support here, and Kristjan as well. I think Marius is a great question. We doing the 2.5 year back in our Capital Markets Day, we make the decision that we want to build in the 3 different independent customer segment and build in the own branding for each of those customer segment, and try to serving as independent business units on those 3 different customer segment as well. And on this point, we practically decide that the Swedbank customer offering is it's a little bit different, and it's running by different customer segment, and our cross-selling activities between those was being mainly with the sleeping customers, or the customers who are not very, we call like inactive customers. But not with the active customer base. We don't have doing like a cross-selling between those. And now, of course, we have analyzed this situation, and we have a look into opportunities, what we have it, and we have realized that actually we leave lots of money on the table, and not to do the cross-selling here, the customers in the earlier point that they come to inactive. And that's the reason why we decide to make this change. This is one of the reasons. This is not only reason why we're doing this change, because this change is it's a definitely give the opportunity now to merge the customer journey in the Swedbank customer and Ferrratum customer very seamlessly together, so we can really benefit in the cross-selling opportunities there. And what is the benefits for the CapitalBox part is totally new things, because practically they don't have any banking service there in their customer segment today, so they can practically get lots of new product what they can offer their customers, and doing the cross-selling on their customers, the Swedbank offering as well. So I think it's a CapitalBox is a big winner in that case as well, as like I think it's everybody is a winner there. Why we didn't do it earlier, that one? I don't believe there is like a clear answer that okay, that is the reason why we didn't do this before. We have a monitoring the situation quite long time. And we decide that now it's the right time to do in that one. Team was ready, and we see so much synergies there. Like you maybe remember that the last year we make in the Swedbank tribe, we're doing a quite big cost-saving program, and a little bit outcome of that one, we realized that okay, actually it's maybe even more efficient and scalable that we take this team and resource and technology and merge with the jointly in the using the both one there. So that's the more or less the situation there. Bernd, do you want to add something, or the Kristjan?
I would agree to that. I mean, the timing is an issue and focus is an issue. We can't do everything at the same time. Now is absolutely the right point in time. Ferrratum has been focusing on establishing the core target markets to exit here and there, clean up a little bit, and it is now perfect timing. CapitalBox, as you have certainly noticed in the presentation, a lot of energy, a lot of drive in the organization currently, excellent management in place. And that is just the right point in time to get that going now for the other businesses.
Good.
Marius, do you have any follow-up questions, or should we move to next?
Yeah, if there's the opportunity, then I would ask one more question with regards to your further regional expansion. As you pointed out that in your total addressable market, about 50% stems from the UK, Germany, and France. And so I'm wondering about your roadmap with regards to your further regional expansion, and also with regards to your, or in this context, your total addressable market in terms of portfolio volume, potential portfolio volume. Do you expect this to show a similar or even better risk profile compared to your current portfolio volume?
Good. Maybe if you Bernd accept, I will start and you will be following that one, and then maybe everybody else, the leadership team, you can support if you have any feedback there, Kristjan or Mantvydas. One of our investors, they have raised the question quite often, this our total addressable markets. We have used this method as a like internal purpose and not the lots of like external purpose to share in that one. And this is today is the first time when we share this for the investors and stakeholders as well. Maybe one step back before how we calculate the whole total addressable market. So we have each of those three, we have a little bit different computing logic behind there, but we practically look in the example of Ferrratum part, we look in the market size, we look the population, we look in the what is the consumption driven lending, the whole market there in the country specific. We split the whole market is a country specific. We look the different local specific the data as well. Then we look in our position there, and that's where we get it the market potential there. The CapitalBox, we looked a little bit different. There we practically give it look in the total SMEs on the total lending. We looked at what is the overlook by other traditional banks. Then we applied there in our own scoring principles and our scoring the parameters, and only that are the segment what we are looking here. By the way, same logic in Ferrratum as well. And multitude bank it's a wholesale banking is a little bit combination of those logic. So that's the way how we're coming out of those numbers. Now, if we look the Ferrratum part, it's a Ferrratum market share as the original Ferrratum business tribe. The market size was around the 7 billion euros, and the market share was from that one around 7.8%. So they have it a little bit less than 10% market share, they own business there. However, now when we extended the business offering, or we extend the offering for the Swedbank products, it's actually extended our total addressable markets in Ferrratum, but in CapitalBox as well. And based in that one, our current share of that total addressable market was coming a little bit down. And what is indication for me is that we have actually lots of opportunities there. We are a little bit like a new starting point today where we are, and because we practically scale down our market share, because we redefine our definition on the market. on the definition is a little bit larger, and that's the reason why our current share looks smaller there. And for us, this means that we have a huge long runway ahead of us to tapping on those markets. Bernd, do you want to add?
No, I totally agree to this point. And I guess there was another question, if I understood that correctly, addressing our view on risk profile going forward. Have I understood that correctly?
Yeah, exactly. Especially whether your growth ambitions in your addressable market fit your current risk profile, or is it even better or worse?
Yeah, as Jorma pointed out, I mean, the reason why the market share appears to be a little bit smaller than it used to be, I mean, this is an extension of an addressable market. This in itself is a good thing, as it opens up fundamentally new opportunities. One of those is the wholesale banking, and one of the features of the wholesale banking, but also of the collateralized lending that CapitalBox has just introduced this year, is that we take in collaterals, that we engage in collateralized and in fact securitized business. And this is not a guidance that we will push our credit losses down, but it is reflective of the ambition to see that reflected in our credit losses going forward positively. That is, this is factor number one. Factor number two, I think both the data that Clemens Krause has shared and that I've shared and that we're presenting in the in earnings call on a quarterly basis puts or show a long-term trend, and this is a downward sloping credit loss development, and this is something that we want to keep at least stable. Ideally, of course, we always want to get better each and every year. So naturally, the ambition is to see that trending downward going forward as well.
Good. Thank you, Marius, for good questions. I think the next person on the line would be Philip Hessler from Pareto Securities. The floor is yours, Philip.
Yes, hello. Thank you. Philip Hessler from Pareto. I hope you can hear me. I have two questions. I like your 1 billion euro market cap dream. And I would like to ask you, because I think the key lever to achieve this target is to achieve a higher price earnings multiple. Why do you think investors should be willing to pay you again higher earnings multiples like they did like 3-4 years ago of well above 10? Maybe you can share your thoughts on this. And secondly, also I like your new payout target ratio of between 25 and 50%. I think this should be linked probably to your core tier 1 ratio. Can you please explain whether this is true, this assumption, whether it's linked to your core tier 1 ratio, and what minimum core tier 1 level you see for you, and also just explain a little bit the rationale behind this 25 to 50% payout ratio. Thank you.
Good. Thanks, Philip. Thanks your questions. Maybe I can start with the first question, and then we can then again Bernd help me and support me, and then we can jump to second one. That's you nailed it, Philip. Is I think this question related our dream to the building a 1 billion euro valued company in the coming next 5 years. It was content in our presentation, what we thinking the several weeks. Shall we share that one or not? And the reason behind we have it there was that we have a longer time with the management. We have a talk about our situation as a listed company, that we are the very undervalued company today. We look into our growth rate, we have a amazing track record. 2021 we give it the 3 years guidance on the profitable growth guidance of 50%. We are well on track that one. And in the same time, it's our share price is not reflection maybe that one. Of course, market have changed there as well, and we really see that our role as a management is not so much talk about what is the share price, what's the right share price, or what's the right company valuation there. But our role is that deliver continuously and systematically in the unbelievable performance on the growth and profitable and stability point of view as well. And this is how we see our view. And that's the reason why the put on the Capital Markets Day, this statement on the slide, it was a long topic for us. It was maybe taken more time than many other slides. It's a more maybe important topic but we end of the day decide that we want to share with you our thought there. We want to share with you in our dream. And why we believe that one, there's multiple reasons. We believe that the first one, that we as a Multitude, we are not traditional bank. We did not show to treat and looking as traditional bank. We are the fintech company. We are the technology company. I hope the investors today have realized and see that if you look our number of the people who are working in the Multitude group, the main part are the technology and data-driven people. This is our really core what we are, who we are. We have built our growth platform now in the 2.5 years. So this is practically the core, our everything is where we try to build in the different elements on top of that one. We have, of course, we benefit from the lots of banking world on the benefit scalability funding and the certain other elements as well. So we utilize a little bit on the positive part in the different environments over here. This is the one point. The second point is, of course, our growth and our profitable growth, what we can deliver there. And top of that one, we expect that the investors appreciate our capability to make a profit, that we are the fintech who really make a profit. I mean, it's real money in every year we do it. And we even are ready to pay the dividends for the shareholders that each year. And all of that one are fueled in the ESG driven. So we are really the top of the what's happening outside on today. So based on that one, we have a strong belief and understanding that it's only a matter of time that the market and investor communities are realize the opportunity what they see with us, and this will be support our multiples there as well. This is the more or less our thinking process there. Bernd, do you want to?
No, it's a combination of those factors, and it's labeled as the dream. But I would like to go one step further. This doesn't mean that it's something that we consider unrealistic. This is something that I think, or we think, can materialize. And this is exactly the semantic issue that we discussed here. Does a dream in the end mean that it's not something that we can achieve? We believe, for the reasons outlined, that we can achieve that. From a pure valuation perspective, only one aspect I would like to add, maybe. I mean, tech companies over the last couple of quarters have been beaten up quite massively from a valuation perspective. Financial industry in general didn't do super well in that respect either. And we see that from time to time. And this is also something we expect to normalize. The pendulum will swing in the other direction. So this is why, we labeled it as a dream, but it's something that, if all goes well, is doable.
Exactly.
Good.
And Philip, your second question about our dividend payout ratio. Maybe I can start, and Bernd, you can continue here. So this was actually second topic what we talk about, not as long like our dream, but if we looked at our history, the 18 years history, we have practically paid each single year the dividends between the 20 and the 35% from the previous year profit, excluding on the years, those 2 years during the COVID time. When we say that we want to secure in 2020, we say that from 2019 profit, we said, okay, we don't want to pay the dividends because we want to keep the equity as strong as possibility, because we don't know what's happening on the market. And then, of course, our hit, like Lasse explanation earlier, in the 2020 and 2021 years, when we was able to share the healthy way the dividends. And now in the last year, we continue this our pattern, the paying the dividends, and we really want to, because quite many investors have asked from us that one, and we want to confirm and put this in the table very openly and proactively, that we see the view that we want to be the dividend-driven company, and that we want to share the investors the dividends as well, and we want to guidance this. We want to give some guidance and view how we want to see that. Of course, naturally, it's every year we have to adjustment that, we have to analyze that one. We have we have to shareholder meeting have to, AGM have to approve that one. But we want to share with our view in the payout ratio on today, the first time actually in our history. Little bit confirm what we have done already multiple years. Bernd, maybe you can bring a little bit CET1 ratio elements there as well.
Yeah, so that everybody understands, the backbone, the regulatory backbone of essentially all of the business is our own bank, and managing a bank is quite a challenge from time to time. We have Antti Kumpulainen seeing present today as the CEO of the bank. And naturally, we need to make the defense safe, if I may draw a analogy to the sports terminology. Making defense safe means that we need to make sure that we don't do anything that puts the soundness and the viability of our regulatory backbone at risk. Currently, we have 130 million roundabout equity in our bank, almost exclusively CET1. This is the capital requirement currently is in the region of slightly above 16%. And this is something that is changing all the time. And we will see the MREL requirements, which stands for minimum requirement for own funds and eligible liabilities. So now also the type of liabilities is going to be regulated, which makes the whole story even more cash consuming and more complex. So these are, without going into too much detail, these are minimum requirements that at all time need to be safe. At the other hand side, we have a clear expectation on net profit, and we think that dedication will go in the direction of doing as much as we can in terms of value creation for shareholders. And these are two aspects that we need to balance. So we think it's doable to do both, to make sure that the bank as a regulatory backbone will fulfill the increase in capital requirements, and at the same time bring ourselves in a position to pay dividends. And the best way of doing that is producing as much net profit as possible.
Fully agree.
Good. Thank you, Philip, for the good questions. We are a little bit running out of time, but we still have a few questions here, which we try to squeeze in if possible. The next person to ask question is Harald Hoff from Alpha Research. Go ahead, Harald.
I hope it's working so you can hear me.
Yes.
I would like, thanks for taking my question. I would like to get a better understanding regarding the guidance you've released this morning and later on. First of all, I would like to understand if the EBIT guidance for 2024 is still valid, which was released in, if I remember well, in 2021. And the question then is, how do you plan to reach this target and the contribution of the different segments? Please, maybe you could provide a little bit more insights regarding also the sweep bank and now the wholesale banking, how much contribution is expected. And maybe you mentioned it, but I didn't get it or didn't saw any hint regarding the shift from the guidance. What do you report now or go to net profit from the EBIT before? And one last question, or part of the guidance is the dividend policy. The new policy, does it already account for the fiscal year 23? So the payout ratio 2024 will be the first year when it's will be in place. Thank you.
Good. Thanks, Harald. Thanks. Maybe we start the last question because we just touching the Philip Hessler and Pareto question, the similar topic, and the dividend part. Yes, short answer is that that yes, it's a plan that it's applicable for this year, the profit as well. And like I say that it's earlier, it's more our view, our like how we see the dividends showed to the what's the payout ratio there. But end of the day, it's always is AGM. The shareholders have to approve that one, and we have to align this with those regulatory part and covenants part as well. It's what Bernd mentioned in the earlier. But yes, short answer is yes. It's planned to be valid from today further. Good. Bernd, any adding for the dividends part?
No, agreed.
Good. Good. Then maybe we can jump to guidance part. In general, maybe I start in general part, and Bernd, you can go to a little bit deep diving that one. Our whole thinking process, why we want to change guidance, it was not it was a print serve the better our investor community on the way that we can visualize our earning, what's the real life, the end of the day, our main profit, what we can deliver there over the next years. And we think about our thinking process was that this will serve our investor community better, that the investors don't have to calculate the different metrics there, that you can just look in our net profit there. What is coming on the next year guidance related EBIT guidance, what we have communicated, like you say, 2021, it's this is valid. So we did not have a plan here that we swipe out something old guidance and now try to shift it to some new and a little bit hiding something. Definitely no. I think thinking process more the print transparent and more information and more bold view for the all investors, to showing mainly our own thinking process, our own view, how we see the market, how we see the market and what opportunities we have, and how we can scale up in our profitability on the coming next 3 years. So shortly, next year EBIT, we see that is still valid, and we just guidance more in the little bit longer and the focus in the net profit behind it. Please, Bernd.
Yes, exactly. Another 50% increase relative to the 45, that is and will be the plan. And yes, it's a service to investors. I mean, many investors have asked us in the past, would you consider? We said, yeah, we might consider. Then investors have asked us, yeah, maybe you want to consider now because interests are going up. And we understand the guidance, and we appreciate the ambition of going up 50% each year. And as I've pointed out in the presentation, not everybody thought it's doable. Now, we essentially see it is doable. Another question is that we want to answer, what does that mean in real money? So if interests go up and funding costs go up and funding volumes go up, we would be super interested in understanding what does it actually mean in real cash. And net profit gets very close to that, plus the ambition of being open and transparent about how we think about dividend. This is why we think that this can help investors understand what's in it for them, and hence drive value for shareholders. That was the plan. And to the technical aspect, we will change as pointed out, the logic of, or the structure, not the logic, the structure of P&L, for instance. But we will, of course, make sure that investors will be able to see EBIT also in the 23 and on the 24 financials. The plan is to introduce or reflect EBIT as an alternative performance metric, so that there will be no uncertainty whatsoever about what EBIT actually would be and will be in 23 and 24.
Yes, exactly. And additional of all of that one, we believe that guidance to net profit, it gives us internal the right guidance and right direction as well, the matching with our vision. and this matching our dividend policy principles, and this matching our dream, or to link to our dream to build into 1 billion euro valued company in the next 5 years. So that's the way how we link those things together here.
Good. Thank you, Harald, for good questions. And as we are running out of time, we still have one last question there. So we want to give an opportunity for Fredrik Jarkov from New Ways to ask question, but let's hopefully try to get a short questions.
Yeah, sure. I do my very best. I hope you can hear me, guys.
Yes, we can hear.
Perfect.
Hi, Fredrik.
Yeah. Hi. Could you elaborate a bit on the effects of inflation and rising interest rates on the margin on loans? So do you expect the margins to remain rather stable or even to increase further? This is my first question. My second question, just very quick. You had M&A, the topic on each agenda of all the tribes. So maybe you can say something regarding pipeline and timing here. Great.
Yes. Thanks, Fredrik. Maybe we can start to again the M&A, the last second question, first one, and
sure.
So we have like a few on the M&A on the two different way. The first one is we looking on the group level as a multitude level. We keep our eyes open for the new tribes or new opportunities. What we can add it as a like our growth platform, and those opportunities. It can be the new countries or new product, but they are mainly the new business driven, and they show to somehow the fitting in our growth platform, that they bring the value add for the platform on the other participation, like Ferrratum and Swedbank and Multitude Bank and the CapitalBox, and of course the opposition way as well, that they will benefit that as well. We does this one acquisition, the investment at the beginning of this year, the Sorter. And this might be one of those, but we don't know that today. Currently, we focus to help them to grow into faster and scale into other countries. And later on, we will see, is that coming to one of our new tribe on the later or not. But we just don't know it that today. But we continue to explore into similar opportunities in top of our growth platform. And by the way, we believe that timing is relatively good currently as well to look in those opportunities. The second one, how we look in, is how we can fuel more our current tribes. The main focus is a Ferrratum and CapitalBox, of course, where we see the lots of opportunities today, mainly in the new products or new the countries, and there we have like a process where we have analyzed the different countries on our peer group, and we have not anything public today. Try to keep my thinking. So we don't have anything to public today, but we have been very actively looking and exploring these opportunities. But it's the end of the day, we are very picky there as well. We really want to we believe that it's not the acquisition is not like a destination. It's just like a channel and way to utilize the both companies the best part what they have it there. And that's the reason why it's extremely important that we find the right partner, right company with whom we go in this journey together. And we have had several conversations, but nothing what we can talk about today on the further. Bernd, do you want to, or Lasse, do you want to add something on the? Maybe Lasse, you are the leading those process together with the tribe CEOs and their teams. So maybe you can.
Yeah. No, thanks, Jorma. I think you answered the question very well. So I don't really have anything to add. Thanks.
Okay, good. So let's jump to second question or the Bernd. Do you want to...
Yeah, whether the margins are going to remain stable or reducing. I mean, in the end, I think there are two aspects here. One is this potential, and this is a bit related maybe to the question that was raised earlier. In those businesses where collateral or securitized portfolios play a role, then it would be not really fully logical to assume that the margins would be exactly on the same level as uncollateralized lending. As these portfolios will grow over time, this will bring margins down a bit, but at the same time, it should pay off positively in credit risk. Otherwise, we wouldn't do it. Other than that, we would assume margins to remain essentially stable. And again, this is a current view. It's not, please don't take it as a guidance, but as a current description of the business and the dynamics of the business.
Good. Hey, thank you all for the questions and answers. And now finally, I just want to hand over to Jorma for the closing words.
Thanks, Lasse. And I really hope you have enjoyed our presentation today. And I think it's very clear that we are a very unique fintech company. We have a strong track record, navigation through the complicated and different market situation. We are driven by ESG principles, are able to deliver the growth and profit and pay dividends for the shareholders as well, like we speak in the earlier. And this is something what we are really proud. And if we look today, we have a huge opportunity, huge growth opportunity ahead of us. And thanks to that's going to traditional banks who have left on over the 55 billion euros addressable market on the table for us to tap into. And I personally believe, our team believes, that this is just the beginning of the story where we are now. We are ready to serve those customers and aim to secure the significant part of the share on this market. And I hope that you have learned from our presentations today that we have everything on the place. We have a technology, we have a data, we have a tools, we have skills, what is needed to succeed here. We just need to execute our plans with the discipline and smartly allocate our resource between those different opportunities. Because there's always opportunities, but you have to smartly allocate your resource there as well. Good, but on behalf of our team, I really want to thank you to join our Capital Markets Day today. And special thanks, of course, going our team to preparation, the clear and simple and informative presentation, to you, the shareholders and stakeholders, to open a little bit more inside who we are, what we have done, and what we will do in the future as well. So saying that one, I think we all want to thank your attention and participation today, and hope we can see you soon.